Bitcoin is a risk-on asset, but it is a risk-off asset as well. And if there are going to be bankruptcy problems out there, then having a vehicle with no counterparty risk in a portfolio will become more and more important over time. And we took our first position, giving our clients exposure to Bitcoin, in September of 2015, when Bitcoin was roughly $250. And it was really interesting at that time. We had been around for roughly a year, a little more than a year as a firm. And when we put Bitcoin in the portfolio, I remember the media, some people in the media were saying, oh, well, that's great. They're just trying to get attention. This is a great marketing gimmick. And that's when I realized, oh my gosh, this could be even bigger than we think. People are making fun of us. And so there began our journey, and we've been there ever since. And I can tell you our conviction has never been higher.
ARK investor Cathie Wood first bought Bitcoin for her investors back in 2015. At the time, Bitcoin was worth only $250 per coin. And Cathie was one of the earliest institutional investors to recognize the opportunity. Despite buying so early and holding for almost 10 years, Cathie states that she has never had more conviction in Bitcoin than now. Cathie points out that in 2023 Bitcoin turned a significant corner. No longer is Bitcoin being viewed as only a risk-on asset, but it's also a risk-off asset that's able to protect your wealth long-term. Not just against counterparty risk, but also against inflation and the devaluation of the US dollar. Here is what Cathie and her head Bitcoin analyst, Yassine El-Mandra, had to say about why they have such a solid conviction in Bitcoin, and why over 75% of the Bitcoin supply is held by long-term holders.
And what do we have in Bitcoin? It is completely decentralized, completely transparent by digital wallet address, and basically a giant neighborhood watch system, because there are so many people watching now, people whose livelihoods depend on this, not just in the developed world, but especially in the emerging markets. So it helped us prove the point. And then on deflation, what was that point? Well, there is no counterparty risk with this transparent, decentralized ecosystem. Unlike our banking system circa 08-09, counterparty risk was the reason the financial markets seized up and were paralyzed, and why the financial authorities and fiscal authorities had to come to the rescue. That will not happen with Bitcoin.
I think, you have the Bitcoin spot ETF approval, you have institutional acceptance, you obviously have the Bitcoin halving, and maybe we can end on that note. This Bitcoin halving, which is a scheduled event that occurs approximately every 4 years, is expected to occur in April of this year. And I think it's quite a provocative event in that it reinforces Bitcoin's scarcity, and that it is effectively the most predictable monetary system relative to its monetary policy the world has ever seen.
So just to get to help explain that a little bit, the halving means the rate of growth in supply is going to be cut in half. Is it to 0.4 or 0.5%?
So reduced from about 1.8% to 0.9%. So just under 1% inflation
per year.
That's right.
Which means if you compare this to gold supply has increased on average roughly 1% per year. Bitcoin's supply growth is going to drop below that.
Thanks for watching. Please don't forget to like and subscribe to this channel.